Good morning, listeners, and welcome to the Haven Financial Group radio show. I'm Larry Kalvig, founder and CEO of the Haven Financial Group, talking about retirement every week with you, Kim. We have a guest today, Kyle Thomas, certified financial planner on the Haven investment team. Good to have you, Kyle. A lot to talk about, a lot in the news. And Kim, start us off.
All right. Well, we're going to talk about interest rates today. Oh boy, haven't we been talking about interest rates for a long time?
Yeah, right.
Federal Reserve has been busy and cutting interest rates again. There's some speculation they could be cut one more time in 2025, maybe not. Jay Powell, the chair, not really clear about what might happen. But we're going to talk about the impact of interest rates going down on your retirement. First off, we're going to begin by talking about why are interest rates expected to come down, then a lower rate environment and how that might impact your decision making when it comes to retirement, the cycle of lower rates, inflation, and the economy. And then finally, we're going to wrap things up with costly mistakes to avoid as interest rates decrease. So Kyle, good to have you with us. And maybe you could kind of just unpack what's happened with the Federal Reserve this year up to this point.
Yeah, thanks for having me. And it's good to be back on. The Federal Reserve this year, they've met, almost probably nine or 10 times now this year. And they've been discussing rate cuts. They've been wanting to cut rates for the last couple of years. And it just hasn't been the case to actually cut as they were wanting to. And that's just because inflation tended to stay higher than they were wanting it to be. And it's still a little higher than what they want it to be, that 2% target. But we're slowly kind of getting to that target. And now rate cuts are becoming a big talk, with already one happening this year and then expectations of one more this year yet. And then who knows beyond this year. But that's been a big discussion point for going on 3 years now, is what are rate cuts going to be like and how many are we going to get? And we're starting to get to that point where, okay, I think we're going to start seeing a couple of rate cuts in the near future here.
Sure. Let's talk immediately, if we could. Everybody's talking rate cuts, and then they immediately go to real estate, which actually I'm not so sure that these Fed rates, have an immediate impact on the real estate market like people think. But let's talk about the impact that it has on retirees and pre-retirees, because that's who our audience is, and that's what they care about. So as we start to see these interest rates being cut twice now in 2025, and we're in a range of 6%, right? We're around 6% at this point, fluctuates day in, day out, but we're in that range. What's the impact?
Yeah, well, it has a huge impact on retirees because a lot of retirees are they're invested in bonds and instruments that provide yield. Mm-hmm. And yield is directly tied to what the interest rates are. Income from new cash instruments like CDs and savings accounts and just different types of bonds, treasury bonds, short-term bonds, long-term bonds, that they all fall, which lowers the return for those investors who are maybe relying on that income on a monthly, quarterly, semi-annual basis to, pay their bills. Mm-hmm. So that could be a lot lower of yield for them to actually, have money in their pockets. And also, existing bonds could increase in value if they're holding them, but it doesn't create cash flow for them, right? So they still have to hold the bond, but the yield that they're getting from it is lower. The value of it is higher, but that's still an asset that you would have to go in and sell if you wanted to receive any proceeds from that, which a lot of people don't want to have to go in and sell their bonds to get money. Mm-hmm. It does create cheaper borrowing, though. So that is, one positive outlook on that. If you wanted a home equity line of credit, your credit cards, mortgages, I know, typically you're not getting a mortgage in retirement, but all of that stuff ends up being cheaper, car loans, right? So all of that stuff is a positive for a lower rate. But then also another positive is that when rates go down, the equity market actually can perform positively, especially in those small cap stock areas. Those are ones that we specifically try to invest in and grab pieces of, because those ones specifically do well in times of rate cuts. So we have a diversified portfolios of all bonds, different types of bonds, and then stocks and sub asset classes of stocks, and making sure that we're just diversified so we can handle, different types of markets, but also capitalize on a rate cut environment.
Kim, if I could add quickly to that, he mentioned the yield crunch. Those conservative investors, which we have at Haven, people tend to be a little more conservative, don't have to be, but we see things through the lens of retirement because we're visiting about retirement. A lot of our clients are retired. Mm-hmm. And so they're seeing those rates on CDs, high yield savings that they were getting 4 or 5 at the peak, about 5.5%. Now coming back to under, high 3s, maybe 4 if you're lucky. So they're seeing that, and then they see, well, as Kyle mentioned, the equity markets may look a little more appealing. But what comes with that? Risk. Well, be careful. And to be careful, not because we're worried about the market because it goes up and down. And it's just that risk as it relates to retirement, you may get in a precarious situation where you're taking too much risk, which ironically, a lot of folks we sit down with, they have no idea how much risk they're taking until we stress test their portfolio and give them a better understanding. And awareness and understanding is so important. They don't have to be the experts, but they should have a good understanding of how much risk they're taking. In a lot of cases, what Kyle and the team finds out is they're taking way more risk than their comfort level. Mm-hmm. And they have this big question mark on their face. I wonder why that is.
Yeah. So yeah, that's a big question mark too.
It is.
Yeah. So let me ask you, as we watch these interest rates go down, and again, as we've said, the Fed is not real clear as to whether we might see another interest rate drop before 25 is out. Is this actionable time? Should people be changing, or should they hold steady, to the end of the year? What are you advising?
It's definitely worth a conversation because, you can alter your portfolio to match the needs that you have, and you should constantly be doing that. We say we really like to meet at least twice a year with our clients because, there's various things that go on throughout the year, but we want to do a check-in and then also some further planning, like taxes and all that stuff. But during those meetings, you should always be looking at are your goals aligned with what your portfolio is doing, and then also your advisor should be doing that as well. But it's always a good time to look at the portfolio and see is this what we want right now? And you could definitely take a look at and try to grab some pieces of bonds and capture that appreciation if you don't necessarily need the income. Plus, there's some products that we're seeing right now that, the rates probably aren't going to be as favorable in the next few months. So if you could lock that in right now, mm-hmm. that could give you a higher guaranteed interest rate. And we're seeing, 7% on a first year for that kind of product. And in a year from now, I'm not expecting it'll be at 7%.
Sure, absolutely.
Yeah, the reality is the Fed is really doing a balancing act, and it is a balancing act. Mm-hmm. These changes need to be slow and predictable. They're fighting a balance between obviously recession risk and inflation. And then there's this uncertainty, the government shutdown, which has gone on the longest one ever. So there's the key data. They just don't have the data because of the government shutdown. So they risk coming up with some errors because they don't have the data. So they are truly doing a balancing act.
Yeah. And a balancing act on the part of the Fed. But this is also that time when, and you guys talk about this all the time, that you need to take a look and see if you need to balance your portfolio and make sure that you're aligned with what's happening, correct?
The communication.
Right.
Communication with whomever you're working with, mm-hmm. not because we want to create fear and anxiety, which, this does create fear and anxiety for a lot of folks. With that should become more conversations with who you've partnered with, talking through, here's your plan. Remember, we came up with this plan. Remember, we allowed for these things because this isn't the first time in history this has happened. This continues. History has a way of repeating itself. So getting the confidence through these conversations to go, oh, now I remember, no knee-jerk reactions, stick to the plan. Not that there's not going to be modifications, but again, that confidence comes with conversation.
Well, it also comes with a plan. So you have to have a plan first, and then then you need the partner who can help you through it to make sure in these times when we keep seeing changes on the federal level that you are as balanced and as protected as you can possibly be. Do you have a plan? Are you looking for a partner? Haven Financial Group would love to sit down with you and chat. It's 612-504-8400 and tell them that you've heard us here on the radio and that you'd like to come in, sit down, talk about either putting a portfolio together or maybe you have one and you'd like them to look it over. Run a stress test, make sure you're where you need to be. Again, that number is 612-504-8400. We're talking about interest rates, and as they come down, the climate changes, and we're talking about how that impacts retirees. Up next, lower rate environment and the decisions that you need to make as a result of it. This is the Haven Financial Group Radio Show.